Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Monday, September 16th. Hope you guys are having a great morning so far. We got a few items here on the docket. We do have a busy week this week, but we'll start off with the economic calendar. This week today we had the Empire State Index. This is manufacturing in the New York region. So we had a 4.8 back in August, and it did drop down to 2.0. Still in expansion territory, but still very low here. We've been seeing manufacturing taking a little bit of a hit of late. It's been kind of dropping, and at one point we even seen some contraction. So this is something that we're definitely keeping our eyes on in manufacturing, as well as the Fed will be watching. And speaking of the Fed, they will be beginning their two-day meeting starting tomorrow with the FOMC, giving their announcement on Wednesday, which expected to see a 0.25% rate hike or rate cut, excuse me. So there's supposed to be a rate cut in that process, and they'll be listening very carefully over a few of the things they're saying. Basically, with this weekend we had the drone attacks in Saudi Arabia attacking the oil fields and having a spike of oil. So what they're going to be looking at is comments by the Fed if there's anything with, or at least for bonds, they're going to be looking for anything that might be inflationary. So if they do the rate cuts and they express anything that could be pushed inflationary, that could spook bonds and we could see a spike in interest rates. Now, if they cut the rates and don't have any concern about inflation's all under control and ease the markets, we could see some improvement. So those are the big things we're really looking for coming up ahead here. So let's jump ahead here to the headline news. As mentioned, stocks are down due to the attack on the oil fields. They were ending the week pretty nicely last week, but today with the attacks on Saturday from the attacks, still don't have a confirmation exactly who did it. Was it the Houthi, if I'm pronouncing it right, is taking responsibility, and then there's been blame from the U.S. to Iran and stuff like that. So until we know for certain, we don't know exactly who has played the role or who is involved. Yeah, and I'm sure there'll be some type of retaliation from Saudi Arabia as well. So let's kind of jump ahead here to the bond market. Bond market is getting a little bit of a bounce upwards. We tested a 100-day moving average here. We had a horrible day here in terms of the bonds. We had several price changes to the worse on Friday, losing about 62 basis points. We're up about 25 basis points currently right now, and that's helping better pricing from where we left off on Friday to today. So pricing should be a little bit better today than what we left off Friday with. And here's yields. We're down to about 1.85 currently, and again, yields been kind of spiking a bit too. As you can see, it looks like we could potentially have a crossover, which will help us as yields have kind of gotten into that over bought position, whereas mortgage-backed securities are kind of doing the same thing, oversold position, and we could see hopefully a reversal here at some point in the near future here. All right, so again, we got a slight improvement in the rates compared to the end of Friday, not the beginning of Friday, but the end of Friday, as you saw right there. Beginning of Friday, of course, we're way up here, probably another 40 basis points, almost 40 basis points. So we're not to the level where we even started the day out Friday. We are still down from that, but a little bit better than where we finished, since we had probably about two price changes to the worse, 2 to 3 price changes to the worse on Friday. All right, you guys have a great rest of your day. Thanks so much for watching. Catch you guys on tomorrow. Bye bye.